Good morning, everybody. Happy Tuesday. Just about to get started here. Good to be back. Just going to quickly wait another couple of minutes here for people to come in. But other than that, we should be good to go. Got, I think, an important week here this week to kind of go through the middle part of February. Remember, February is a shorter month, obviously, so we need to take that into account as well. We'll just give it another minute or so, folks, and then we'll get started, okay? I'm just going to quickly check one more thing here. Alrighty. All right. Let's get started. All right. Very good. Okay, again, good morning, everybody, and happy Tuesday. Good to be back after a week on the slopes. We're coming back here to, I think, a market that is slowly changing. We're going to talk about this a bit more with Market Rover members in about 15 minutes in our weekly member session here on Tuesday. Some of the major trends that have been slowly changing underneath the surface. I'm going to take you through a couple of them. You're looking at the board here. We've been talking about this now for God knows how long, but the performance, I think, is very clear. You can see at the very bottom there, financial stocks from a sector perspective, year-to-date are down 5.7%. Technology stocks are down 3%. Energy and materials are up 21.5% and 17.5% respectively. So that trade continues to work. It's not going to be a straight line. I'm not expecting that, but that continues to work out, and we want to continue respecting that rotation. We think that's a multi-year rotation, not just a few weeks. But again, not a straight line. Expect some durations in that. I took a few notes here of things that I'm watching very closely. I wanted to give you this sort of an extension of this analysis. One of our favorite stocks year to date, or this year, I should say, it's in our top 3 stocks ebook for 2026, is a company called Dominion Energy. And this particular name is a utility stock, and it's up about 17% on the year. You guys can go kind of read about it as well, but it's essentially, natural gas services play, which we believe is critically important for the entire energy transmission or energy. I guess the transition to more energy production. I think that's probably the best way of putting it. So if you look at that particular stock, you can see this is just performance. Up 13.5% year to date. I misspoke by 3%, but still a very nice move. And you can look at a name like that, and if you just want to look at a chart, you can see, stocks that have this kind of, getting back on their feet show a lot of grit. And that's the kind of stuff that we want to look for when stocks turn around. This is the opposite of this would be something like Microsoft, which essentially had a blow-off top, a double top actually in last July, and then once again in October, early November, and now we're kind of in no man's land. Microsoft, by the way, has also changed its trend. We're going to talk about that in our Market Rover member session in about 10, 15 minutes or so. So a lot of stuff like that's happening. underneath the surface, and if you want to understand the equity market, I think it's really important to have a decent reading on the bond market. And so the bond market, we've been talking about this for some time now. 2-year yields specifically, this is a long-term chart, are at a point where they might start to finally break down towards 3% and maybe ultimately lower. And so if you look at this more specifically on sort of a very sort of daily chart, you can kind of see the levels there, right? It's not going to be a straight line of complete just failure down to 2.5%. But the reason the front end yields are coming down is typically it's a multitude of factors, right? It's typically to some extent based on economic gravity, which I do think the economy is not going to accelerate from here, right? So the rate of change is probably to slower. Not talking collapse, but just slowing at the margin. And secondarily, of course, we do have to take into consideration the political aspects of it all, which is basically, the Fed and wanting to lower front end rates depending on well, now it seems to be pretty clear who's going to be Fed chair, but so this is all happening, and I think ultimately, if we do see 2-year yields drop, not much further from here, I think the equity market is going to listen. If you are using our momentum indicator, particularly the trender momentum indicator, you will notice that the NASDAQ 100 has actually turned bearish momentum. So we had, and this is not something that happened today. We talked about this on the 4th and 5th of February, and so far we haven't made a new low, but with this morning's open, we could see, we probably will see the NASDAQ 100 start to break towards the very low end of that range. So we have new bearish momentum, both in the NASDAQ 100 and I believe in the S&P 500 as well. On top of that, we have, stocks that everyone owns 10 times over, like Microsoft, which I just mentioned before. Again, nothing new here. This stock has been in a bearish momentum situation since the 5th of November. So essentially what I'm telling you is that what we continue to see play out here underneath the surface, or this is actually on the surface, is very much this divergence of where money is going. It's coming at the margin out of tech and going into things like energy materials, even staples, and some other parts of the market. But that's kind of most clearly where the money's heading. So that's kind of what's happening here, and I think it's just important to understand that the low volatility environment that we've had may be coming to a head. So if we just look at the VIX for a minute, which is typically not the best way of understanding what's going on, but it doesn't hurt to look at it, which is why we pointed out. But the VIX is now kind of in no man's land. I think anywhere between sort of, 18 and 25, the VIX is kind of in no man's land. If we start to see the VIX go above 25 and stay above 25 for a while, specifically, then I think you start entering sort of a period where it might be interesting to start pressing some bets on the short side of the market, right? So we have this, typically the VIX works in 3 ranges, somewhere between 12 and, let's say 20. Then you have sort of the 20 or, to 25, which is kind of nothing, but I'm going to go 20 to 30, which is sort of somewhat elevated volatility. And then you've got the 30 and above where you start to see real fear in the market. So we're not at the point yet where this is a jump out the window kind of thing. But again, from a momentum perspective, I want to reiterate, whether it's Microsoft or the NASDAQ 100 or things like Palantir or Robinhood or all those or financials now too, they have flipped a bearish momentum. They haven't changed their trends. So actually some of the Palantir and Robinhood are now in a bearish trend. But particularly, but all those names have turned to bearish momentum. So, typically a lot of retail investors tend to be okay in the market when it just bubbles higher every day. But most retail investors tend to miss the big changes in the markets. And I just, our goal here at the Steady Trader and everything we do is to make sure people understand when it's time to pay attention to the markets. I think we live in a day and age when everyone has 9 finance and trading apps on their phone. Most of them aren't making money, and it's because they don't understand when they don't understand when it's time to pay attention to the markets and when it's kind of boring. I think we've had a very dormant January. I think we've been very vocal about that here. We said that going into the end of December, we said January might be boring, and it was boring, and we stayed through that. I think now, over the past couple of weeks or so, we're starting to see a little bit more signs that things might start to heat up, and so we want to pay attention to the bond market, of course, to the equity market. By the way, the commodity markets, we're actually doing a trade today for our ETF Silo Pro members in oil. We continue to be very interested in that part of the market. In fact, I'll leave you with this here quickly. This here is the commodity chart. In fact, let me just quickly bring it up like this. This here is your Bloomberg Commodity Index. I'm going to make it a bit larger so we can zoom out. Anyone that's ever looked at a chart, in fact, I have to bring up the correct one. Sorry about that here. All right, anyone that's ever looked at a chart will probably see that this is not necessarily a bearish signal, right? So the commodity complex to us remains one that we want to watch very closely. That includes energy stocks, by the way. I know that's not exactly the same thing, but that whole space, both from a structural perspective, from a fundamental perspective, and ultimately from, structural means money flow as well. Perspective is very, very interesting to us here. So we hope this has been helpful, folks. We will see you guys on the inside. If you're a Market Rover member, we'll see you guys in about 5 minutes. We'll go through the different sectors. Again, specifically, I want to look at a couple of ideas on some of those high flyer stocks that have now come off and explain to you kind of where we are in trend. So that's it right now to start the week. Short, but I think still information packed. We'll be back here tomorrow morning, and we're working on a new upgraded format. We couldn't launch it today, just it was a bit tight on time, but at some point over the next week or so, probably we'll have a new format it's more about the visual aspect of what you can experience. So we'll work on that. It should be a lot more fun for all of us. So thank you. Please give us a thumbs up, please subscribe to the channel, folks, and we'll see you guys back here tomorrow. And Market Rover members, we'll see you in about 5 minutes or so on our weekly session. See you there.